Hey guys, in this video we're going to be doing our July market update, so stay tuned.
Hello everyone, welcome to The Buzz, Coffee and Real Estate. We're jumping in, we're taking a pause on our seller series, which we've been walking through step by step of whether you were selling your house with a realtor or selling your house yourself. We're going to take a pause on that because we really wanted to jump in and give you some data. This is going to kind of be a nerdy one on what does the market look like. So not just a July update per se, but what has 2023 looked like and how has the market really shifted since last summer, which is where interest rates really shot up.
That's right.
Because I mean, we were at the super low interest rates for a long time.
Oh, totally.
And I mean, I would say really most of our adult lives, we've seen super low, way below industry averages interest rates.
Oh, yeah.
And I mean, I've been telling people over and over, the 50-year average for interest rates, if you go back 50 years, anywhere from 6 to about 8 or 9%.
Yeah. Yeah, I know for me, it's like when my first house that I bought, that would have been probably close to 10 or so years ago, 2008, 2007 market.
Yeah.
6%.
That was 15 years ago.
15? Oh, wow, it's been
Time
that long.
flies.
It does. So I was at 6% on my first mortgage.
Yeah.
And then
I actually was too. I was
they-
at 6, yeah.
And they dropped me to 4.25 like a couple years later.
Okay.
And then I sold that house, bought another house. I was at 3.25.
Okay.
So I was like, oh wow, this
Going
is
down.
great.
Yep.
Bought my next house, I'm at 3.75.
Yeah.
So.
Yeah. So you and I were just getting in the market as the interest rates were starting to fall off the cliff.
Yeah.
6% though, that was a good interest rate.
Yeah.
And then for 12 years, it was considered a nightmare interest rate.
That's right.
So anybody who's younger than their mid-30s probably won't even remember what normal interest rates looked like.
That's right.
But of course, that gave a huge shock to the market. Everybody was like, whoa, the world's coming to an end. Inflation's out of control, blah, 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 blah. You know, lenders were given predictions of anywhere from 10 to 12 to 14% interest rates all the way down to, hey, tomorrow it's going to drop back in the threes, just hang on. And really what we ended up seeing was right around, I would say, November, December, January, there was a stabilization of that 6.5 to 7.5. You know, it varied back and forth, and now it's sat really right around 7, just a hair above 7, a little below 7. Of course, we always preface this by saying this is based on your credit.
That's right.
Your down payment, you know, a 30-year fixed is always what kind of the benchmark of what we're using. It could be more than that, it could be less than that. But for us to use a number, if you're going to look it up online, what at a market rate, it's been right around 7. So just that thought process of, okay, interest rates went crazy, now they've stabilized, so what has the market done? I think people got used to it.
They did. I mean, it was a very, what would be the right word, kind of a fabricated type rate, and then all of a sudden it went to normal. We're like,
Now it's, you know, it was astronomical, then it was like, bummer, I don't think this is going to change fast, and all of a sudden it was just kind of like, okay, if we're going to buy or sell a house in the next little bit, we better go ahead and do it. And thankfully, you know, inflation has gotten under control now, and the Fed has finally quit, you know, with this every quarter bumping interest rates up and up and up and up and up. All of that has stabilized, which is great. But 7% looks like it's where we are for a little bit.
Oh, sure.
Might fall a little bit, might rise a little bit. You can get on all over YouTube and get everybody's predictions. We're not going to give one of those.
Yeah.
But all that to say, I wanted to jump into some data of what has that looked like over the last 12 months nationally first, and then we'll kind of funnel into in this state, kind of in our local markets, more the urban markets, and then even what does it look like in our small little pocket in our county. So nationally was kind of interesting, and I'm going to unashamedly credit a couple of different podcasts that I've listened to recently for a lot of this data. If you're looking for any kind of investing stuff, there's a podcast website. They do tons of material called Bigger Pockets, and it's specifically real estate investing all over the nation. They got, you know, people putting stuff up on every hour, forums everywhere. It's overwhelming. Biggerpockets.com is a really cool spot. But I was listening to some of the data that they were presenting, and 137 markets was kind of what they took. You know, all of the large cities in the U.S. and then some of the mid-range cities in the U.S. And it was a super mixed bag. I was really surprised. You know, they had some of the larger cities that really escalated super fast during COVID have now turned around and dropped off. Like Austin, Texas, I think ranked as the worst. They had lost something like 14% of value in the last 12 months. You know, that would be, if you were in Austin, that was a crash.
Yeah.
On the flip side, Fayetteville, North Carolina, which is only about 2 hours, maybe a little over 2 hours south of us,
Yeah, 2, 3.
got a huge Army base on it, Fort Bragg. They went up by 14% in the past 12 months. So you had this almost 30% swing, 14 up, 14 down. Most of the markets fell somewhere in that 1 to 2 to 3%, one way or the other.
Oh yeah.
But I know, some of the West Coast stuff, some of the big cities that really just went out of control during COVID, they have made market corrections. They've dropped, and that's a good thing. They needed to adjust. We in North Carolina are more of a small city, state, even though Raleigh and Charlotte and some of those have, we think of them as big cities. They're really not that big. So if we kind of, we siphon in, so on the national level, 59% of markets actually went up. They gained value, 41% lost value in the last 12 months. Okay.
Oh wow.
So really kind of almost an even blend.
Yeah.
And then if we siphon down a little bit into the local markets, so if you're looking at North Carolina, where we're recording is smack dab in the middle between the Greensboro, High Point, Winston market, which is a medium-sized urban market, and the Raleigh-Durham, Chapel Hill market in the east.
Yeah.
And so we're kind of in this, what we call the 40-mile bedroom community stretch. We got a lot of folks that are heading one way, one spouse is going this way, one spouse is going this way, or they're working from home, but they're based out of one of these larger centers. And it was really interesting because the Greensboro side had actually gained like between 5 and 6% appreciation. They'd done pretty well. Average days on the market like 23. They were getting multiple offers. I think they said an average of about 3. And you can look at all of this data you can find on Redfin. I mean, you can do the Google research. This is not like Cam's secret information. I'm just giving you the cliff notes, okay? So that market did have appreciation, but it's a lower price point market. It's only in the high 2s, I think,
like
for an
280,
average.
286.
285, 286 is kind of a normal median home price there, which is very affordable from a national perspective. Raleigh, on the other side, of course, the greater Raleigh, so Raleigh, Durham, Chapel Hill, Carrboro, all of those different areas mixed in there. That was a little bit different story. So that was still a very competitive market, still getting an average of about 3 offers on homes. A lot higher price point, low 4s. So I think maybe 410, 412 average sale price. But that one actually lost about 2%.
Oh yeah.
So they had a bit of a market correction there, which made sense. I mean, you and I saw as we had we had buyers and listings that were kind of that way last year. It was nuts land. I mean, it was crazy. Stuff in the Guilford County area with the Greensboro, High Point, Winston. Yes, it was busy last year, but it wasn't that busy.
That's right.
It wasn't crazy insanity.
Well, one of the big things that hit them was when COVID hit, because when COVID hit, they kind of shut down a lot of their showings. Like you couldn't see the house unless you were under contract.
You don't want Guilford.
Yeah, so that kind of held them a little bit too.
That's a very interesting point you make, because each county made their own decisions on how strict they were going to be specifically with real estate showings. Yeah. And Guilford, they took a pretty hard line on it.
Yeah, they did.
And so that may have actually helped them in the long term. It may have slowed them down from the astronomical jump, but it also meant that they didn't have the same type of correction.
Yeah.
So, yeah, we're spaced right in between those two markets. Greensboro, 23 or so days on the market, which is very, very fast. Normal in a balanced market, most realtors will tell you, is anywhere from like a 60 to 90 day. Sometimes in normal markets is 3 to 6 months on the market. 23 days is still super fast, because you have some crummy homes that are on the market longer than that, and then most of the remodeled in good shape homes sell in a weekend or two. Raleigh, on the other side, still very competitive, but higher price point, so a little bit more restrictive, and had a little bit more of a market correction there. And then as you siphon into the even smaller markets of all these tiny little cities in between, Burlington being the largest population between those two, which is kind of where we're based. I just ran the numbers today, last 14 days on the market. So this is just everything that has sold in this little pocket in between the two larger urban centers in the last 14 days. It was kind of a real neat 40-40-20 ratio. Okay, so 40% we're selling for over list price.
That's right.
40% we're selling at list price. And I'll put a plug in right now for new construction, because when you get a bunch of them that are selling directly on list price, what is typically happening is that's a lot of new construction. They're not having a lot of bidding wars because the house is getting sold as it's about halfway done. But they're getting their sale price.
That's right.
You know, and so this is a great time if you're having trouble looking, you know, finding a house because the inventory is still really low and really restricted.
Yeah.
Look new construction.
Yeah, we've done a ton of those.
We have. We've had a lot of folks that have come in interested in new construction. We got them into a house smoothly, smooth closing. The supply chain problems have gotten worked out finally from COVID. So the windows actually come in on time. The roofing materials come in on time. The siding comes in on time. We have one that's getting ready to close in a few days. They said, you know, back in March, they said, end of July closing. Well, it's going to close on the 7th of August. So technically, but for new construction to close within 7 days of when they estimated way back in the, that's really, really good.
And I think they actually said we could close on the 3rd, but we had to push it back a little bit
Yes,
longer.
just so you're right. From scheduling issues, they were hitting right on their timetable. So new construction, look into it if you're having trouble because that's a really good option. And we got a lot that's going into this area. But I think that accounted for most of that 40% of the right on the money at list price sales. And then you had about 20% that were slightly under list price.
Sure.
You know, but we're still talking 98%, 99% of list price. And those are for the homes that haven't been remodeled.
That's right.
You know, they're outdated, they have issues. So it's still been very, very competitive in this market. And actually, I talked with an appraiser a couple of months ago, and he said, you know, we went from a super high seller market, super low buyer market, and then we shifted into kind of this balanced market as people freaked out over interest rates.
Yeah.
Maybe not 50-50 balance, maybe a 60-40 balance that's now switched back into maybe not the 95-5 like we had a year and a half ago, but more of an 80-20. I mean, it is a very obvious seller's market, very obvious seller's market, and it's heated back up, which is, you know, not necessarily good. I mean, all of the experienced real estate agents out there, we've been waiting for the market to get in a place where a buyer can find a house and a seller can sell a house, you know, and that's a beautiful place to be. Here, sellers are still at an advantage. They're still selling houses for a great price. Yep. Buyers can find houses a little bit easier than they could. I mean, we've had a lot of buyers that have gone under contract, thankfully, that we have found, whether it's resales or new construction. Right, but it's still kind of difficult because the inventory is still super tight. So anyway, I hope that helps you. Sort of that national into the North Carolina funnel and then down to more the super local market of Alamance, Guilford, Orange counties, right in that range. But I mean, you've had buyers recently that have run into some pretty serious bidding wars and things like that.
Yeah, so we've got some investors. We had an investor that they went $38,000 over list price on a property. There was
but it was on a property that was in the like 100s. So it was what 33% over list price or something along those lines, or 20% or something. I mean, it was crazy.
It was I mean, they had listed the house at like 52, I think it was.
This house was in super rough shape.
Yeah, it was in rough, but it wasn't. I mean, for an investor, it wasn't bad.
Okay.
It was in good condition for that. I mean, you're looking at a $52,000 house. You're not talking at
It's tiny. And it's
So the place that it was in, the comps for it were well over $100,000, and so it was kind of like, why is this listed so low? Okay, we understand there's some things that are going to have to be done on it and so forth, but it just ended up being kind of the perfect storm. But it was a flock of people. I got to the showing,
a flock,
and there was like 8 agents, and there were some agents that had 2 buyers with them at the same time. You know, like, hey, it's going to be our block party. Everybody just show up. We're just going to go for it.
Wow.
And so we were like, wow, well, what do we offer on that? And so I told my client, I said, well, we're just going to pray. I was like, I have no idea.
Yeah.
And so that was the pricing that we felt like we heard, and we went with it. We ended up winning the bid on it.
Wow.
And so it ended up working out. But, you know, as far as from an investor standpoint, that was an unusual. Yeah. Most of them have been 5,000 or 10,000 if it's in a bid war.
Yep.
Doing that significant. I think the house was too low on price, so you know we kind of balanced it out.
I don't think it was priced correctly.
Yeah.
It should have been priced a lot closer to what you guys ended up getting it for anyway.
Totally.
All right. So I had a buyer who was planning to make an offer on a house.
Yeah.
We reached out. Hey, you know, do you have other offers on the table? Listing agent was like, well, I got 8 already. You know, house had been on the market for a day and a half.
Yeah.
Another house that was actually out close to where I live, so super rural, way out in the tobacco fields up in Caswell County, and that one already had 7 offers, I think, on it by the time we had gotten to it, which was day 2 or 3.
Yeah.
You know, so yes, very competitive in that, especially first-time home buyer market. So just some things to keep in mind. I mean, actually, we had one other buyer that was really interesting. This is a higher price point. This was like a mid 400s price point, which, you know, in Alamance County, that's more of a higher home. And house went on the market, was just what the buyer was looking for. But I told her, I said, look, I know we're at this higher price point, but homes in this neighborhood have been selling, even at that price point, have been selling in about 7 days.
Yeah.
So we need to jump on it and go ahead and go in. We went in a little bit over, about $5K over list price, and we did get it by moving quickly. But yeah, even some of the upper price points, at least for our market, more expensive price points are requiring competitive offers.
And even in the crazy part, like we had that one lady that we did, she did new construction, and we didn't even we got it under list price. I believe it was it was either under list or we got closing costs. I can't remember which, but we ended up getting an incentive off the gate on our initial offer without having to go over or any of that.
Yeah.
And so that's one of the things that we're seeing too, is that there's some negotiation abilities for buyers, even in new construction. I mean, of course, there is some in pre-existing conditions, but at the same time, I'm noticing that, you know, if it's a brand new house and it looks amazing, it's probably going to go list or above. If it's kind of like, oh, well, you know, it needs a little bit of paint, a little bit of carpet, then you might be able to get a little bit of a deal on it.
Yeah.
So that's one of the things that's nice.
Well, I think that this brought some of the investors back out. You know, we've had more conversations recently with investors because there for a while they're just like, what's the point?
Yeah, not overpaying for it.
And so while, yes, there are some bidding wars, I would call them lower bidding wars, besides the one that was just priced incorrectly.
Yeah.
38,000 on a 52, that's unrealistic. The home should have been priced higher. But as far as stuff that's competitively priced, we're working, more realistic over list price. Hey, I'm going to throw you an extra 5,000, 3,000, 7,000, whatever, to make it work. So anyway, all that to say, we whacked you with a bunch of data, but you know, the wrap up is Central North Carolina has been a great spot. We've continued to see a lot of activity in some of the bedroom communities in our area specifically. However, we've gotten multiple buyers under contract in the last several weeks, which has been really encouraging because there for a while you were just breaking people's hearts every time they got outbid.
Yes.
And so I hope that helps you as you're navigating. Is this the right time to sell? Is this the right time to buy? We will continue to keep you updated as we go. But just the super oversimplified, it's still a seller's market, not quite as crazy as it was last year. Of course, interest rates are higher, so it's having a bit of an effect keeping some people in their houses for longer. Because think about it, you know, I got a 3.25% interest rate, and when I sell the house, I'm gonna have to move. I had a conversation with a young couple the other day, and they said, you know what, we're starting to bust out of our house, but we're gonna put the kids in the extra bedroom. You know, we're gonna do whatever we have to do because we're just not quite ready to make that jump to another house. So I think it's helping keep inventory low in that you've got some folks that are kind of locked in, or at least they want to be locked in a little bit longer to that lower interest rate. So
awesome.
Yep. Anything else that you had on this one?
No. If you guys enjoyed this video, share it with somebody that needs this information. Go ahead and hit the like button. Leave us a comment in the comments below.
Not the description below. I've only said that like 5 times in these videos.
But thank you guys for watching. We'll see you in the next one.
All right.